heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow, he's off today. This is Bloomberg Technology. Coming up, well, all the artificial intelligence throughout the show you need, from a potential bubble in AI stocks to an AI girlfriend. We've got you covered. Plus, states versus companies. We'll break down Disney's decision to pull back in Florida. Look at the legal challenges facing Montana as TikTok users sue the state over the ban. And in today's VC Spotlight, we'll speak with the founder of Atomic Labs, one of the original backers of Hims & Hers, as they announce their new $320 million fund. But first, let's check in on these markets. And look, nervousness about a debt ceiling debacle continuing to erode some of that confidence as we go into a weekend. We're off by 0.1% in terms of the Nasdaq, just coming off of those lows, but still worries about what Jay Powell is saying, of course, speaking, the Fed chair, really looking as though he's on track for some sort of pause in June. That, of course, implicates what's happening with the 2-year yield and the 10-year yield at the moment. We're seeing a bit of a steepening of the curve. We're basically flat, down by about 1 basis point on the 2-year yield. KBW Bank Index, interesting one. Treasury Secretary Janet Yellen maybe hinting at further deals, M&A needed in the banking sector. So the small regional lenders, they drop 1.5%. Move it on. Let's dig into some of the individual movers, though, because we have seen actually Apple managing to, well, we haven't got the biggest, most impactful stock on the green. It's going to be helping big tech in general. Apple sort of bouncing back a little bit. Cisco bouncing back after that erosion in its market capitalization yesterday as we worried about its future sales were up 2%. Amazon, though, down 1.4% as we worry more about the inflationary consumer environment upon us. And let's dig into that macro picture right here, right now, because we want to give you the perspective on the Hill. GOP debt ceiling negotiators, we understand, abruptly just leaving a closed-door meeting with the White House representatives soon after it began, really throwing the status of how we avoid a U.S. default into doubt once again. Bloomberg's Kaylee Lyons, I'm pleased to say, rushes to set for us. And what do you think at the moment, what were we expecting to come out of today's discussion?
Well, up until we got these headlines crossed within just the last hour and change, Caroline, it was feeling much more positive. The mood music seemed much more optimistic. Speaker McCarthy himself was talking about the idea of having a deal in principle by the end of this weekend. That all seems to have changed as of this morning, which, as you say, saw that the negotiators on behalf of the speaker, led by Congressman Garrett Graves, walked out of this meeting saying the White House was being unreasonable. And Graves went on to say he didn't know if they were going to be meeting later today or even at all over the weekend. So that clearly throws the timeline into a bit of flux here. And we have to keep in mind that at the end of this weekend as well, the president is scheduled to return on Sunday from the G7 summit in Japan, where he currently is, where it is right now about 1 a.m. He is in all likelihood sleeping at the moment as this is crossing. And I would point to a tweet from the Senate Minority Leader Mitch McConnell saying that it is only the president and Speaker McCarthy who can make a deal on this. They are the only two who can reach an agreement. It is past time for the White House to get serious. Time is of the essence, because remember, Caroline, we're less than 2 weeks away from June 1st.
Well pointed out. So sticking points that these two individuals need to unblock at the moment?
Well, there's a few. One really big sticking point that seems to have emerged is around stricter work requirements for entitlements. This is something that Speaker McCarthy has previously described as a red line. It is something the president himself has signaled openness to, except for in the cases of health-related benefits like Medicaid. Yet many in the Democratic Party have pushed back against this idea. I've spoken with a number of progressive Democrats, members of the Congressional Black Caucus as well, who said they would vote no for any deal that included those stricter requirements. Then there's also just the question of spending caps, what the duration of them should be, where they should be, and really just the timeline for how long into the future the debt ceiling should be raised. 2025 after the elections of next year, or sooner than that. So those are some of the points that need to be ironed out, and clearly they are having difficulty moving forward on those, as, again, those negotiating on behalf of the speaker say that the White House is not being reasonable on this. We'll look for reaction from the White House negotiators themselves, Caroline.
And reaction on market and asset prices at the moment, the Nasdaq bouncing off of its lows, but big implications for tech stockholders. Kaylee, brilliant. Thank you so much for joining us. Meanwhile, let's turn our attention to the tech stories that we've got to be digesting on the day. OpenAI, well, it's brought that ChatGPT generative AI tool now to your smartphones more easily. We've got finally the iPhone version available, and it promises, of course, to service Android, Google-owned Android devices in the future. Let's break it all down. Rachel Metz, I'm pleased to say, is here, and I'm sure it's a less clunky feel to sort of the user that is so addicted to ChatGPT in all its forms at the moment. Just how broad is this going? Is it just in the US thus far?
Yeah, right now it's just available in the U.S. It's a free app, but they said that they're planning to roll it out to more countries in the near future. And as you mentioned, there is an Android app planned in the near future as well.
And yeah, the delay, often companies make an Apple iOS app available before a Google Android. But is there something to be read into that in some way, the competition, of course, between Bing, Microsoft, and Google and the like?
Ooh, perhaps. I think that's actually a really good point. I mean, I think part of what we're seeing here is there's so many iOS users, and you often have a lot of them that are using the same version of the software at the same time. So it might be easier to hit a lot more people at the same time. Android can be a little bit more stratified. So that might be some of it. I think we'll have to see when the Android app comes out what the difference is, you know?
And just as we still try and work out just the unrolling of this particular app, it's interesting and kind of ironic, right, that Apple itself has done what many companies are doing and just putting pause on using ChatGPT within its own walls.
I'm so sorry, but I couldn't hear the end of what you said. Could you repeat that?
Of course. Rachel, is Apple itself, it feels kind of ironic that Apple is perhaps stopping its own employees use ChatGPT.
Oh, yes. We've heard that is going on there. And I mean, on the one hand, that's ironic, but I think it also speaks to the fact that a lot of companies are really trying to figure out how and if they can use this software. You know, and they don't want employees pushing through either personally identifiable information or company secret kind of stuff. But yes, it is a little ironic that then there is an app available through the App Store for iOS, which, you know, a lot of Apple employees use iPhones.
Yeah, and just from a consumer perspective, of course, OpenAI, ChatGPT, it was the fuel to the fire of why we now talk about artificial intelligence day in, day out. It really caught the consumer imagination. The people you talk with, the consumers using it at the moment, are they in any way worried about privacy, about their own chats, about the way in which it follows them around from one device to the next and they can't delete them?
I mean, I think it sort of depends on the person. I haven't looked at the app, into the app settings yet myself that specifically, but you may be able to turn off the gathering of the data by OpenAI, which you can do on the web. It wouldn't surprise me if there's that kind of setting in there. I mean, I think people definitely are thinking about where is my information going when I'm using this. But sometimes it's like, hey, I just really want to get an interesting margarita recipe, and I think ChatGPT can help me with that. That's what I was doing yesterday. So
you are speaking my kind of language, Rachel Metz. Thank you. As we head towards this weekend, absolutely brilliant. Always joy speaking with you. Thank you. Meanwhile, let's talk about the implications on your stock holdings right now, because the rally in AI stocks is, well, leading indices higher this year. Maybe breaching, in fact, bubble territory. That's all according to Bank of America's Michael Hartnett. Now, he's once again reiterating this call that you've got to get out of US stocks at these levels. He's saying that tech and AI, in particular artificial intelligence, are forming some sort of baby bubble, is what he called it. And the Federal Reserve's rate hikes, look, they may not be over. For now, though, we'll just see how that baby bubble is currently fueling the Nasdaq 100 up 26%. Remember, we've heard other banks and analysts saying, in fact, it's the only reason that the Nasdaq is in the green and the S&P is in the green is down to AI. Meanwhile, coming up, and the need for an AI companion. I'm missing Ed Ludlow. Could we turn his voice into, well, a bot that I can be chatting with? That's getting weird, but John Mayer's the man who could do it for us. Forever Voices AI, about the platform's recent partnerships that propel fans to interact with their favorite influencers. Also watching shares of Palantir right now. ARK, in fact, doubling down once again. 1.26 million shares of the company they've just snapped up. Remember, they've just been saying that they want to dominate the AI market, particularly in the world of defense. At 1.3% from New York, this is Bloomberg. Forever Voices AI. You would have been reading about it, of course, in the last few days. They're best known for a forever companion service, but it's working with some of the hottest influencers on social media to allow users to interact with them using, you guessed it, artificial intelligence. It just announced a new partnership with the Twitch star, Amaranth. Joining us now for more on the experience, how it's continuing to snowball, is John Mayers, founder and CEO of Forever Voices AI. It all started with Karen Marjorie was the one that really caught my attention. She now has 18,000 boyfriends through her own AI. Just, have you been surprised by the uptick, the desire to be having these sort of really in-depth conversations with someone you feel that you know?
We've been absolutely astonished. You know, this whole story started with me wanting to reconnect with my late father in AI form, using his voice and his personality. It turned out that was such a powerful technology that we then applied it to influencers that have these large followings of fans that would love to meet and talk to and interact with these people. And so with our latest launch today with Amaranth, one of the top Twitch streamers in the world, you know, we're sort of further defining this new era of AI to human interaction, where you can interact with an AI copy of the person you admire most.
How do you, in fact, some of the technology behind this, John, just ultimately, how are you producing these voices? What sets you apart from others?
So what we've done here is we've taken a baseline large language model and we've applied these proprietary layers on top of that we built, such as a personality engine that develops these, you know, immerse deep personalities of AIs, in this case, Amaranth or Karen that we launched last week, where they exhibit feelings. You know, they can connect with you on a deep level. They can share insights. So that's what our personality engine does. And then we also have our voice engine, which is really powerful. So that allows us to take really just about 10 minutes, let's say, of audio of an influencer that we sign a deal with, where we're getting their rights to their likeness and voice, and actually replicate their voice in AI form to democratize access to their fan base trying to interact with them.
John, you share an emotive story as to why you first started this, wanting to continue a relationship in an AI form with your late father. A similar story for the founder of Replica and her lost friend in a car crash. Now, a lot of Replica's viewpoint is this is about mental health as well as having companionship. But I'm interested in the safeguards that you put in place, because ultimately, if you're, as you say, blurring the lines between reality and virtual interaction, there must be some superfans who get a bit confused here.
Absolutely. So what we've done is, as the conversations with our AIs develop, if you're speaking to, you know, our Karen AI, or today now with Amaranth from Twitch, what we've done is we've implemented procedures that have automatic detection of a variety of situations, from mental health situations to overuse. And so the AI will actually, in real time, either slow the conversation down if a conversation is going too long, or if it appears someone might be getting, let's say, addicted. And then what we've also done is built a mental health engine to detect various states of depression, anxiety, and soon to be even cases of bipolar disorder among users, so that we can in real time connect them with human therapists and human-ran emergency hotlines if it's ever needed.
Totally can understand the building of the business for Amaranth, for example, on OnlyFans, already just supplementing how much she can go out and build and profit from this. But who else are you speaking to, and how many actually celebrities are worried about their voices being generated without their rights involved? Or how are people trying to get ahead of the curve with it?
Well, you know, before this whole story went viral last week of us at Forever Voices AI turning, you know, the first influencer into an AI girlfriend, we've seen hundreds of other influencers and celebrities reach out in a matter of, you know, the first 48 hours. And so there's been a bit of a transformation over this last, you know, 7 to 10 days since this whole story went around the world, that has opened up people's minds to the idea of replicating themselves in AI form, not only as a means of adding additional revenue to your, you know, your content creator business, but as a way, again, of interacting with fans in this entirely new way via, you know, this immersive two-way audio experience, and even soon to be video as well.
Your original business, did you have rights to those celebrities when you were building those voices?
So what we started with Forever Voices was really a series of demos that leverage the technology to show the world what is possible. And so what we've done is we've simply donated any proceeds from, let's say, an unlicensed demo of, let's say, Grimes before we get a deal done with her to charity. But the core of our business is through these signed license deals with influencers and celebrities, such as the one we're announcing today with Amaranth.
Okay, so Grimes, there's a hint there, there's discussions. What about your own discussions? What about your own fundraising? Because I'm sure there might have been a few VCs picking up the phone to you as well as celebrities.
Yeah, it's been a whirlwind of a week. I mean, we've been in touch with everyone from Index to Benchmark and so on, and we are in a position now where we're really turning this into a hyper scalable business where we see a future in the very near future, and I'm talking next 2 years, where every significant influencer that is looking to make a living off of content or let's say YouTube, Twitch, Instagram, what have you, will raise their hand up and say, I want to create an AI version of myself. We see every influencer having these in the next 1 to 2 years.
John Mayer, keep us in the loop on it. Founder, CEO of Forever Voices AI. Thanks for your time there from Austin today. Meanwhile, coming up, look, new voices and new moves from Disney that will reshape its business in Florida amid an intense battle with the state's governor. And let's just take a quick check on Tesla, because we've got more on a key story of international growth, or indeed supply chain for this particular business. How are they eyeing India at the moment? That's all in Talking Tech. That's up next. From New York, that's a Bloomberg. It is time now for Talking Tech. First up, Baiju's Alpha, one of India's hottest tech companies, well, it's been accused of hiding $500 million from its lenders. Now, the allegation came out of a court hearing on Thursday, where Baiju's Alpha faces a lawsuit over who should control the company. The dispute is the latest setback for the self-proclaimed biggest education technology company in the world. Meanwhile, sticking with India, a group of Tesla executives traveled to the country to talk about locally sourcing components and government incentives, but stopped short of proposing any sort of manufacturing its cars in the country. That's while Tesla will eventually look to establish a domestic factory in India. Sources say the automaker is actually still concerned about India's high tariffs on imported cars. And in other Musk-related news, his lawyer apparently has pinged the CEO of Microsoft, accusing the company of violating its data agreement with Twitter. Now, the letter says that Microsoft has accessed Twitter's data for an extended period of time, and comes on the heels, of course, of Microsoft's moves to drop Twitter from its ad platform. Elon Musk, of course, has been a pretty vocal critic of Microsoft's investment in OpenAI. Meanwhile, let's just talk about Disney for a moment, because it's closing that much discussed luxury hotel at Walt Disney World in Florida. It's actually nixing plans to relocate 2,000 workers to the state, and it's all amid this embroiled battle with the Governor DeSantis, and it all is carrying on. Person to get us up to speed, Chris Palmieri, now joins us, of course, at Bloomberg. And Chris, I remember the fanfare around that Star Wars-related hotel. It was extraordinarily expensive, I seem to remember. Why are we thinking it's being closed? Was it because it was Bob Chapek's baby, or it's too expensive?
Certainly it was Bob Chapek's idea. It began when he was heading the parks, even before he was CEO. It takes a long time to build those things. Look, it was a risky project. This totally immersive hotel. It doesn't even have windows in the rooms. You're going there for 2 days and just pretending you're going in space in a Star Wars experience. It was very expensive, started at almost $5,000 a couple for 2 days. And so it started off initially pretty strong, but then very quickly you started to see plenty of dates available. They never lowered the price, which I thought was interesting. And I think it's just such an oddball property, only 100 rooms. There's not a lot you could do with that space. So right now they're just shutting it down and figuring out what's next.
And at the same time, they're not going to be spending a lavish amount of money on new office digs. They're going to be amid this ongoing narrative that they're basically fallen out big time with Ron DeSantis. We know that they've sued him. How is this all playing out in terms of just the relationship with such a key employer in the state of Florida?
Well, Bob Iger, Disney CEO, is certainly turning up the heat. I mean, he said on the earnings call last week that, hey, folks, there's jobs and investment dollars at stake here in Florida. And this week, he really backed it up. So total reversal on the plan to move 2,000 employees from California to Florida. As Governor DeSantis' spokesperson noted, this is happening at a time of general upheaval at Disney. They're looking for ways to cut costs. But Disney has even flagged that they want to invest $17 billion in Florida over the next 10 years, but maybe they won't be able to do that anymore. The reality is they have to keep investing in the parks, but if there's a project like this move that's unpopular internally and expensive, maybe they'll just nix that.
And overall, how much do you think this is ultimately costing the company in terms of, well, either distraction to a certain degree or just an unknown for those that they employ there?
It's a huge unknown. You saw Macquarie downgrade the stock today, and Disney's down a bit. There's a lot of uncertainty. The traditional TV networks profits are falling. The streaming business still losing money. The parks have been the star, but how long can that continue? So there's definitely an impact on this when you enter the world of politics. There's some people who maybe won't go to the parks, won't see their movies because of the stance the company's taking. And so it's a difficult world for Bob Iger right now.
Yeah, we see near-term uncertainties weighing on earnings, valuation and sentiment. So says Timothy Nolan. He's over at Macquarie at the moment, as sort of we reference. Do you think ultimately we're likely to see still focus on cost cutting, still worry, of course, about the issue of whether they have to fire more talent and let go of more people? Are we through the worst of it now, do you think, in terms of the trimming down of this business?
Well, there's no doubt Bob Iger's being very aggressive. There's 7,000 people being laid off. We broke the news yesterday that they're pulling all these TV shows from Disney Plus and Hulu. These were shows that they made in this great early push into streaming to sign up as many subscribers as you can, and it's cost money to keep these shows on the service. So they're looking for ways to cut all over the company. My guess is that we'll start to see that improvement in, not this fiscal year, next one. And so that may be the story for 2024 at Disney, the great turnaround. But right now, it's definitely a work in progress.
Chris, it's always great to catch up with you. Thank you, Chris Palmieri, on the enormous amount of business and issues that Disney is currently facing in Florida thus far. Meanwhile, coming up, we're going to be continuing to follow kind of the legal fallout that we see between states and individual companies. This time, of course, Montana, having banned TikTok come January the 1st, is in fact some of the content creators that are fighting back. Meanwhile, let's take a quick look at Netflix. Barclays has a note saying an increasing flow of Japanese money overseas is paying for these video services. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a quick check on your markets because we've got a macro story that is pulling back some risk sentiment today. It is the worries about the debt ceiling at the moment. The news still coming thick and fast. We understand the White House is saying there's real differences between the two sides on a budget. They're working hard on a bipartisan debt solution, but they say the budget talks will be difficult as far as we know that the negotiators of the Republican Party did just walk out of a very short meeting, but an hour or so ago. NASDAQ off by 0.3%. We're seeing the 10-year yield react. We're getting a steepening of the yield curve, so yields coming down on the 2-year. We're up on the longer end. Maybe that's also something to do with some of the data that we continue to digest, the focus on Jay Powell saying, look, he will likely pause. That seemed to be the way he was spinning it in his conversation earlier today. It felt as though he was looking very much at how far and how fast the Fed has already moved. KBW Bank Index is on the downside. That's as Janet Yellen sort of been hinting behind closed doors with other bank executives that maybe more consolidation is to come. That's hitting the regional lenders. Moving on, let's look at what's happening in the world of crypto, because some great stories out today. Yuqi Yang of our Bloomberg reporting team really talking about the lack of liquidity there is in this particular asset class, dropping off, retrenchment from Jane Street, from Jump in particular. And as we see these market makers pulling back, it's really bad for the industry, so traders say. For the past 5 days, basically treading water at about 26,899 is where we stand. Let's get back into the world, though, of, well, states versus companies. Montana, of course, marking the first U.S. state to ban TikTok. Now, a diverse group of creators with hundreds of thousands of followers, they're suing to challenge the first statewide ban of the popular app, arguing that the law violates free speech rights and will disrupt their livelihoods. With us, some more, is Bloomberg's Alex Barinka, and certainly TikTok was making that case. Do you think they've gone to their content creators to help win that over?
It wouldn't be the first time. Back in 2020, the lead counsel for this suit was actually on another suit against Trump's order to block TikTok. So it is a little bit of deja vu. This time we have 5 creators, a rancher, a veteran, someone who designs swimwear, a wide group of people who are coming forward basically saying that Montana is not only infringing on their freedom of speech, First Amendment right, they're also running afoul of the 14th Amendment, the right to due process. And they're also saying, hey, Montana, I know that the governor is saying that they need to protect their residents from the Chinese Communist Party, but that's actually the federal government's job. And it also runs astray of the federal government's job to oversee national security and foreign policy and also interstate commerce. So this isn't the first time this is the argument TikTok has made, but this is the first real legal fight that will be set up in this latest kind of aim to ban TikTok from a number of U.S. states.
And at the moment, we've heard from other voices sort of showing that this is going to be an incredibly difficult plan, whether it's legally speaking to argue, but also from just a way of actually doing it. Have we heard yet from Apple and Google, of course, which are in many ways on the line if it does get banned from January 1st?
These 2 companies have declined to comment. So they haven't actually gone out and said, what could happen here. And you're right, Caroline, the actual mechanism for putting this law in place is a little bit unclear. They're not actually saying that Montana would fine users or users would run astray for using it. But Montana is actually targeting TikTok, Apple, Google, the App Store, saying, hey, if TikTok's able to be accessed, able to be downloaded, we're going to fine you $10,000 a day. It won't start until January when this goes into effect. This legal process might actually slow that down if there is an injunction. But that being said, the onus will definitely be on the companies and not the users, even though we have the users here bringing this lawsuit forward.
And go back to those users, because we know that everyone perhaps who uses TikTok loves the experience, but what sort of businesses are being built on it? We've just been hearing about how someone's creating voice AI to be able to expand on their relationships with their fans, whether they're a Twitch influencer or a Snapchat influencer. But how much money is being built by some of these influencers on TikTok?
Well, there's 150 million users, and a slew of those are small businesses. I've chatted to a lot of them. You see it from the small businesses like the swimwear designer in Montana who has come forward as a part of the suit, but you also see it with large businesses. You might have a beauty creator like Michaela Noguera out of Boston post about a mascara from L'Oreal, and it sells out basically globally on all platforms. So the power and the money that actually moves through this platform is pretty large, and that's a little bit of the argument here, saying, hey, you're actually taking away opportunities for creators, for businesses who are using this to find their livelihoods, or at least that's the argument that TikTok is putting forth, saying we're protecting them from national security risks. Don't take these things away from Americans who are finding opportunity on our platform.
Alex Barinka, thank you so much for breaking that down. And I'm very pleased to say Alex is going to be covering for Ed and I next week as I head out to Qatar. The Qatar Economic Forum is almost upon us, and I'm lucky enough to be interviewing CEO of TikTok over there. So we'll get plenty of questions his direction after this move by Montana. Meanwhile, let's think about more social media activity this week, but in particular when it comes to deal making. They've been active, so too have some other businesses. I'm pleased to say right here in New York is Katie Roof, usually based out in LA, but you're deals focused kind of a woman. And I'm interested at the moment what you made of Twitter's deal, for example, because that sort of went under the radar. We're so busy thinking about what Elon Musk is creating, who he's hiring, but he's also buying, what, a tech talent company?
Exactly. And so it gave us a glimpse into the new direction of Twitter. He wants this to be part of the X app, the Everything app. And so it's a recruiting startup. They actually shut down the business in conjunction with this deal. So it's probably more of an acqui-hire of sorts. He acquired Chris Backey and his business Lasky to be part of the new vision for Twitter, pairing talent and jobs. And this comes right on the heels of the new CEO, Linda Yaccarino, taking over.
Yeah, as he's been finding his own talent thus far. I'm interested in what's happening with Meta, another key company that's, I'm sure, thinking sadly of having to unwind a lot of the talent that it has in-house. But what, they've been unwinding other deals?
Yeah, and so this is part of Meta's broader cost-cutting measures. They are spinning off Customer, which they actually just acquired last year. They announced it a few years ago, but it took a while to get approved by regulators. And so after spending $1 billion on this customer service software, which was designed to be for Meta's advertisers, they decided to part ways, and Customer is now going to be backed by its original VC backers all over again. Full circle, they're going to be backed by Battery Ventures and some others, and they received a new cash infusion of $60 million as part of that investment.
Sense of deja vu, I'm sure. What's also interesting is spinning off as a bit of a theme right now, and in particular, I'm thinking what happened over with Alibaba, right? I mean, how much is the focus on, in particular, the cloud business being one of government oversight, or indeed just basic revenue at the moment?
Yeah, sure. So we got more details this week with Alibaba. They had previously announced that they were splitting into 6 different units, and so now they are going to fully divest their cloud unit. There has been a lot of oversight there. They also announced that they are going to be IPOing their grocery business as soon as 6 months from now, and they're going to also IPO their logistics business within the next 18 months.
I like that. Baby Bubbas, as they were all being called. Talk to us a little bit about what's happening with the Russian tech giant. I mean, really, it was the only one that we associated with key success in Russia was Yandex.
Sure, yeah, sometimes nicknamed the Google of Russia. Bloomberg reported today that a couple of Russian billionaires could take a majority stake in this business. Vladimir Putin, and not to be confused with Vladimir Putin, is one of the potential bidders, which would have to be approved by the Kremlin, but they're valuing the business about $7 billion, and it would include the ride-hailing business that's part of Yandex. The company is actually headquartered in the Netherlands, but it has a long history in Russia and targets the Russian market and is listed in Moscow.
What a global conversation. Thanks for bringing it from the LA here to New York to talk about around the world deal making. Katie Roof, great to have some time with you. Thank you. We're going to stick global for a minute because the crypto investment firm Hashkey Group plans to raise funds at a valuation of about $1 billion. It's taking advantage, of course, of Hong Kong's digital asset push. It's trying to entice potential investors. Hashkey, which operates one of the city's only 2 licensed digital coin bourses, is in some early stage talks to raise $100 to $200 million, we understand. That's all according to people familiar with the matter. Coming up, well, we're bringing it back to the US. Atomic's latest fund. We'll be joined by the CEO, Jack Abraham, on why he thinks now is the best time in history to build companies. This is Bloomberg. Let's talk about the venture studio Atomic. It's just raised $320 million for its 4th fund, bringing the firm to over $750 million in total assets in management. Joining us now in today's VC Spotlight for more on the strategy for this new fund is Atomic Labs CEO and managing partner, Jack Abraham. It's great to have you in town, Jack.
Great to be here. Thanks for having me.
You split your time between Miami and New York, and I'm interested in just what was the funding environment like? Because it feels as you've got AI related, everyone wants to be writing checks and to be putting into your funds. But what was the uptake like for you? How quickly could you raise?
Yeah, the funding environment, I'd say it is a little bit of the haves and the have-nots. We've been somewhat fortunate in our history because we have such a unique and differentiated strategy that most people have actually come to us asking to invest, including actually our largest investor reached out to us cold on LinkedIn, if you can believe that.
No. Who?
I can't say. I don't think I can say, but you would know them if I mentioned them to you. So for us, it was a great process, and we're really happy with the outcome. We love our LPs, and they're really enamored with our strategy.
What sort of LPs are we talking about? Who wants to be putting money into startups and diversification in that way at the moment?
It's a range of your usual cast of characters. You have, university endowments, foundations, you have insurance companies, corporations, but also sovereign wealth funds, actually, interestingly, are wanting to deploy a lot more capital into innovation, which I think is really smart for them.
Anyone you wouldn't take money from? I had a conversation with Alexis Ohanian, for example, who didn't want to take Saudi money, for example.
Yeah, we'd be careful about anyone that we'd bring in. Actually, our process is we like to get to know our LPs, ideally, 3-6 months, a year plus in advance. So we would have to feel really comfortable and due diligence before bringing anyone into our fund.
And then the unique selling point is that you basically help bring in talent and build businesses. How unique is that still? Because I've been talking to a lot more of the growth funds or very early stage funds who are basically bringing on wannabe CEOs or people that they feel could build a business without actually the business idea in place yet.
Yeah, it's actually very unique. It's a model that we started in 2012. So we created what's now called the studio fund model. There are now hundreds of these studios that have emerged. And I think what's unique about us is it's the only thing we do. We focus on it, we nail it. Right now, what's happened over time is technology risk has come down. So what you can build anything. The building blocks are incredible. What you can solve is incredible. There's so much open source. There's a lot of AI that's available, obviously. There's a lot of APIs that you can plug and play. What's really paramount is testing market risk. And what we've really validated is we have an exceptional process for validating and invalidating ideas early on.
How?
We'll do a combination of quantitative and qualitative analyses on markets. We have a team of 75 people, which is pretty large for our fund size, that will go and look into ideas and run tests. Oftentimes, we'll actually pre-sell products to customers, validate that there's demand, so that we know, okay, if we're going to spend all the time and the energy to build this, it's going to be worth it, and it's going to be worth scaling.
Of course, one of the ones that you're most well known for is Hims and Hers. I've heard a lot of reticence from VCs to do anything really with a consumer right now, unless it's celebrity backed in some way, shape or form, or you're Kim Kardashian. How are you thinking about where the opportunity is to build right now?
I think that there's a really big opportunity right now. A lot of people are talking about AI, things like ChatGPT. The consumer side of that is interesting, and it's happening, and people are using that. It's really growing. But I think the bigger opportunity actually lies in the enterprise. I think AI is going to be deployed into every facet of work. You can think of it, every job to be done in a company, there's going to be some AI layer on it. Every function of a company, every industry, every vertical, there is going to be some specialized implementation of AI, not generalized, but very specialized and unique to a company and an industry and a job that's going to make people faster and better at their jobs, more accurate, and ultimately increase productivity across the economy in a really interesting way. We're creating a lot of companies in that space. We have a history of creating companies like Replicant, which has used AI to automate call center technology, like Butter that's used AI to help payments go through online and can increase companies' revenue by 5 or 10% with just plugging in technology for a 24 to 48 hour period. Imagine if your top line can go up that much. So there's going to be a lot more interesting ways to deploy that across every sector and every place in the economy.
This is as we face a tougher environment from an economic perspective. And there's a lot of work that's been done to show out of the ashes of a difficult economy come some brilliant businesses. We've seen the latter-day crop of Airbnb and Uber be born into that difficult environment. Where are you seeing this talent grow? Where are you seeing these businesses most fruitfully be built?
Yeah, so in a downturn, there's more talent availability than in other periods of time. We have a flood of talent. We have thousands of people applying to build companies with us, which is incredible. And where's that talent coming from? Some is companies downsizing, but a lot of it is toward the end of the last cycle, people were really gravitating toward the growth stage. They were figuring, look, I can go work at a company for a year or two. It's going to go public. I'll have a nice payday, and then I'll be done. Since then, that's been delayed. Some of those stocks have come down. So all of that talent, which is an incredible group of talent that knows how to scale companies, they're boomeranging back to the early stage. So I think that's one thing. The second thing is there's dramatically less competition in an environment like this, as you'd imagine. In a crazy environment, everyone's getting funded. People are copying your ideas. Every VC wants to fund number 2, number 3, number 4. It can actually destroy the market, which is pretty bad. And then the third thing that I'd say is really important in a downturn is you learn the right habits as a company.
Yeah.
You're forced to. Actually, half of the Fortune 500 companies were created in downturns or recessions, according to Morgan Stanley, which are very unique, discrete periods of time in our economic history. If you can measure unit economics, make sure it's a good model, make sure that it can scale on its own, you're bound to build a good business in good times and bad times, and we're really leaning into that as a firm.
Come tell us about the ones that you're building in the future. Atomic CEO, Managing Partner. Great to have you here, Jack Abraham. Coming up, look, we're going to be talking about, well, a particular niche area, but really important one, gene editing technology. The landscape there with Ben Oakes, CEO of genetic medicines company Scribe. That's next. This is Bloomberg. Let's talk biotech. Scribe Therapeutics, a platform for CRISPR-based genetic medicine, it's just locked in a deal with Prevail Lilly to create genetic medicines for neurological, for neuromuscular diseases. This is the company is actually getting ready to give a talk a little later today on the potential of its platform and of CRISPR technology more broadly at the American Society of Gene and Cell Therapy's annual meeting. Amid this busy day and afternoon, we're pleased to say Scribe CEO Ben Oakes joins us now for more on all of this. And I mean, Ben, just remind us what you're telling at this event, the power of this technology. Ultimately, your ex-editor, what are you going to be saying makes it different?
Yeah, so Caroline, great to be here with you. What we're actually talking about at the American Society for Cell and Gene Therapy later today is really laying out our CRISPR by design approach, which is an approach that I've been pioneering with Nobel laureate Jennifer Doudna and co-founder of Scribe really for the past decade. Our approach has been to use holistic molecular engineering, or the ability to change these CRISPR molecular machines at every single location to create more active and more specific and therefore safer therapeutics. So one of our scientists will be laying that out today.
And you have design by approach has been, well, Eli now working with Prevail Lilly, Eli Lilly, of course, is the parent company. Exclusive rights, really, to focus on your technology and use it within a neurological and neuromuscular disease context. How is this going to drive this forward? Why do the deal now with this particular company?
Yeah, so I think, there's a couple reasons here. First, obviously, our technologies have continued to advance, and we've been proving them out in vivo models, really demonstrating their ability to be delivered into these organ systems, namely, neurological and neuromuscular diseases. More specifically, I think it also represents a change in the field in thinking about how we can start to apply these technologies for really more complicated and more difficult to treat disorders.
Sense of timing here, Ben, because much enthusiasm around CRISPR and around how it can change medicine. But will this happen in the next year, the next 10 years?
So I think it's somewhere in between the two. There's still a lot of work to do, and I do not want to say that this is simple. That being said, we have seen CRISPR go from really publication within the past decade to really making huge differences in patients more recently. And that is incredibly rapid. I think that just demonstrates the power of this technology. And that's the first generation, right? What we're building really, light years ahead of what's come before. And we're very excited about our ability to move this rapidly and into diseases really at a much broader scale.
Can you give us a sense of how it is to do that within America, vis-a-vis other countries? How is this sort of technology being, the ability to quickly start to target these sorts of illnesses, the sort of partners that you get? Where do you think is the most practical and most efficient to do it?
That's a deep question, and one that actually has many layers, right? If we're talking about more basic technology building, the United States has incredibly powerful universities, which we get to work with, and we do quite regularly. So we have a very close collaboration with UC Berkeley, obviously where Jennifer works, and the Innovative Genomics Institute as well. Now, when we start to think about regulatory and moving beyond just building these technologies, I think that's where the world is also moving very rapidly, perhaps in some instances even more quickly than we are in the United States.
Thank you for keeping it global for us. Thank you for fitting us in on a very busy day for us. Scribe CEO Ben Oakes, we wish you well. Thank you very much indeed. Meanwhile, well, that does it for this edition of Bloomberg Technology. You do not want to forget to check out the podcast, the way that you can absorb all that we've been discussing in an audio way. Of course, go to Apple, Spotify, iHeart, even, of course, on Bloomberg.com. And stay tuned for next week. We're off to Qatar. We're going to bring you some great conversations. From New York, this is Bloomberg.